Hello, it's Paul Scott here on Wednesday the 17th of June 2015. I haven't done a video for a few days, but there are a few items I wanted to catch up on today. So firstly, Flow Group had a disastrous profit warning yesterday. This is the company that makes these revolutionary new boilers. They've been hit by an adverse VAT ruling, which I covered in yesterday's report. Now, so the shares have really collapsed. Now, today, you can see here there's a director buy. The CEO, Tony Stiff, has bought 110,000 shares at 13.75p each. So a few comments on this. That amounts to £15.3 thousand worth of stock, which is not really a huge amount. And it takes his holding up by 110,000 to about 2.3 million, so not a massive increase, only about a 5% increase in his personal shareholding. I take a view, a much harder view now, about director buys immediately after bad news. These are orchestrated buys. They are designed to reassure the market, to prop up the share price. And what I've discovered is that very often these type of buys immediately after bad news are actually prompted by the brokers and nomads saying to the directors, oh, you really ought to buy some stock. So I think it's got to the point where these type of announcements are meaningless. And in fact, as we saw with tungsten, even very large scale, in that case multi-million pound director buying after bad news was completely spurious, and it'll prop the share price up for a few days or weeks, but the share price there continued to collapse. I'm having slept on it. I'm increasingly negative on Flow Group. I think it's got big problems, and I saw the equity development note has reduced the number of boilers forecast to be sold this year from 15,000 to only 500. Now some of that is the timing, the deferral of the launch, but I think the product just isn't really going to work, to be honest, as it stands now commercially. So that's that one. Next, I missed some news a few days ago on Eclectic Bars. Now, I've always been really scathing about this company since it floated. It's been a lousy float. It underperformed repeatedly after floating, and the shares have been a very poor performer. So there's a trading update. This was on the 15th of June, 2 days ago, saying that they've closed, they've got disposed of one site in Norwich. They seem to mainly run nightclubs effectively, premium bars as they call them. Current trading, continued competitive pressures. It's a profit warning basically. Another one. They're reviewing all their costs, and it's a profit warning. So I wouldn't normally have gone near it, but then the second announcement, this is really interesting. On the same day, Luke Johnson, who of course is a very famous entrepreneur in the hospitality sector, who was behind Strada, pizza chain, and Pizza Express, various other businesses, hugely respected entrepreneur Luke Johnson is, and he's subscribed for 3 million new shares at 50p, which was actually, I think, a 3.1% premium to the prevailing share price. Now this is really interesting. Two directors have also subscribed for 150 grand worth of stock. So this sorts out the cash position, but bringing in an absolute star entrepreneur like Luke Johnson, I think could in the long term be transformative. I see this as a very bullish move. Interestingly enough, other details here, he's not taking a salary. He's executive chairman, so he's the boss now. He's also going to get 1.6 million warrants with a strike price of 60p, which again I think is good practice. It's above the prevailing share price, and with his warrants and his new shares, he's going to own 25.9% of the business. So he's got a lot of skin in the game. He's not instantly going to turn it around, of course, but I think this is starting to look interesting. I picked up a bit of stock myself the other day at 67p. I think I paid the highest price of the day, unfortunately. But there we go, and it's got a hideous spread on it, so it's not really a tradable share. It's just something that I'm treating as a sort of 2 or 3 year punt, really, which I think is a lot more credible now Luke Johnson's involved. Right, next, Walker Greenbank. This is the furnishings, luxury interior furnishings group. I really like this company. It's a good company, I think. The valuation got a bit ahead of itself, but started to look more reasonable. Now there's a really good update out today, AGM statement. Financial year to date progressing well, strong trading in UK. Anyway, it's all positive. That basically sales are up about 9 or 10%. They don't actually say anything about performance against market expectations, which is a bit annoying, but they do say here we remain confident of the outlook for the remainder of the year and beyond. So this looks like the right sort of business to be in at this stage of the economic recovery, when consumers are spending more and so on. Looking at the stock report, the shares have gone up today about 5%. Now remember that all the data is as of the previous night, so you need to add on 5% to the market cap, which would be about another 6 million. The P of 16.9. It's a quality business, so that's probably a fair price actually. Dividend yield's not very exciting. I like this business. The quality scores here you can see are very high. I think this one is certainly going on my watch list again. I originally bought these about 50p in the bad times, and then sold them at about £1.20, but obviously that was a few years ago and the business has moved forward. Only got a stock rank of 68, which is surprisingly low. Nice cup of tea. Historic graphs look good. And broker forecast, I love this little graph here. It's nearly always a good sign when you see steady gradual upgrades like that throughout the year. You'll nearly always get a in-line or outperform trading statement in that type of situation. So yeah, I like this one. I don't hold any personally, but I think it looks interesting. Right, fourth one, Flybe. Now this one, whoops, not that one. Let's go to Flybe. Now Flybe absolutely shot up today. I think this is. I've held this stock for a while. I bought before the big drop in share price on a turnaround play, which hasn't really worked out as originally planned, but it's starting to come good now. You can see here there was a really nice move up today, up 11% to 70p. There was no news out today, but results a few days ago were, I thought, reassuring. No new bad news. It's on 12 times forecast earnings. It's a turnaround situation. I've covered it before, so I won't go into all the detail again. But what is interesting, since my discussions with Richard Crowe, who I've got a lot of time for, a very astute trader, Richard and I discussed Flybe in one of my audio casts, and he said he would buy back in when the chart gave him a signal. Well, if you look at this, the chart really did give a signal. The red line is the 50-day moving average, and you can see it sort of traded sideways to slightly down along here. And then it smashed through it a few days ago, and look at the volume. It was on high volume, so breaking through a moving average strongly like that on big volume, not massive volume, but certainly greater than since February, is a bullish sign. And I think I'm certainly more amenable to the idea of looking at charting patterns if they confirm what my view on the fundamentals is. Now, I went through the fundamentals again last night. I've listened to this twice now. This is on Flybe's website on the investor page. There's a webinar with the CEO, and it's really full of detail, 53 minutes long. Very reassuring. I think this is one of the things, well, not very reassuring, but I think it shows they're on top of all the issues, and that the problem issues are really being resolved one by one. The surplus planes is the biggest issue. It's a ring fence problem. And I love the way he emphasises particular phrases. I've got to play you this bit. I'll just stick the microphone by the speaker. It's hilarious.
And what's really encouraging is that revenue is up around 10%, passenger revenue, and passenger volumes are up 10%. So a very encouraging start.
Isn't that brilliant? Passenger volumes are up 10%. Yeah, great delivery. I like that. Another point, I really wish all companies, large and small, would publish webinars like this on the internet. It's so useful. You've got the slides here, which you show what he's talking about, and you get the full unedited presentation that's given to city analysts and so on. We really should have a level playing field where private investors get the same information. So really well done to Flybe for putting this on their web site, and I hope more companies follow suit. We are getting more. This is a definite trend, I think, towards providing the private investor community with decent information as well as the city. So well done, Flybe. Now, a stock I bought more of today, and I just want to flag up to you, Laura Ashley. Now, there's been a really interesting sort of spike up and spike back down again in the chart here over the last few weeks. It broke out, went right up to 35, 36p, and it's come all the way back down again to 30p on no news other than good results with a good outlook. Now look, it's got a stock rank of 99. It has net cash. It's because the enterprise value is well below the market cap. Now look at that dividend yield, 6.7%. And I believe the dividend yield is sustainable. It looks sustainable to me based on my analysis of the accounts. The PE ratio is 11.9. The quality scores are fantastic. I think this looks a really good business. I like this one. I hold some personally. Now the free cash flow figures here I think are wrong. I flagged this up to Stockopedia a while ago. I don't think the free cash flow is negative. The dividend, as you can see, has been held at 2p, but they've just reported 2.4p earnings, which is well up from the just around about the 2p level over the last 5 years. So the dividend is becoming more comfortable now. Dividend cover is increasing slightly, but it's still low, but still a 6.7 yield. You can't turn your nose up at that, can you? And net cash right throughout, although declining a little. Yeah, I think this is an interesting company. The other angle on Laura Ashley, of course, is that it should be benefiting from the grey pound, the pension freedoms, as they call it these days, that we saw in the newspapers. I think $1 billion has been taken out of pensions by people taking advantage of the new rules. Well, that companies like Laura Ashley, serving generally an older demographic, I think will be good beneficiaries from that. So I think the demographics are going their way. Right, running out of time rapidly. What's this one? I was going to do DP Poland next. Yeah, there's been another placing at DP Poland at 15.8p to raise 5.5 million. I went through the figures for this company on here we are in my report of the 11th of February 2015, and I demonstrated here how it's really a complete basket case in my view. They're not even making profit at the individual store level. They're quoting positive EBITDA, but you've got a big depreciation charge on your fit out, and they've also got far too large central costs. So I don't think this thing's going anywhere. They keep trumpeting positive sales growth and so on, but sales need to double or triple to turn this into a viable business in my view. So I'm negative on that one. Severfield Rowan results, I really didn't see anything interesting in these. This is the structural steel company. Underlying profit, they say, is 8.3 million, but an operating margin of 4.5%. But they have all these exceptionals each year. You can see here, no, it's further down, I think. Here we are. Contract remedial costs of 6 million. Well, if you've got contracts that can go wrong and require remedial action of that magnitude, then you want to be making a margin much higher than 4.5% to allow for that. This company has got a lot of operational gearing though, so it's the type of thing that might suddenly see profits shoot up at the right point of the cycle. But to my mind, I think there are much better turnaround situations out there than that one. Let's have a quick look at the figures. SFR, the ticker is. Now the earnings per share underlying, so that strips out all the adjustments, is 2.31 pence. So it's on a P of what's that, 30 odd. That's the forward P there of 19.9, based on a further increase in EPS from 2.31p. So it looks as if they've slightly undershot forecasts. I don't really see the point in paying up front for next year being a substantial improvement on this year. It doesn't stack up to my mind. So that's why I didn't include it in the written report. Right, got a dash. My 15 minutes is up. Cheers. Bye.